yesterday we had mortgage rates jump an eighth of a percent in one day. That's a big move. Well, unfortunately, today we're probably going to see the same thing. So if you're a homeowner, home buyer, pay attention. I might have some good news for you and maybe some advice for you and maybe free calculators to give you down below. But let's get over to the news so I can help explain to you guys, should you lock in or where are these things going to go from here? So the first thing we want to look at is the stock market. And the stock market's getting hammered. And this is usually what happens when you have conflict in the Middle East or conflict anywhere else throughout the world. What investors will do, they're like, okay, I'm getting out of the stocks. They're risky. And I'm going to put my money in the safe havens. Those are usually bonds. Well, the unfortunate part about that, they're not doing that right now. So here's what we follow on my channel. So I'm a loan officer, so I follow this bond right through here. It's a mortgage bond. All you have to understand is that number up through there, if it's red, that's bad. The bigger the number, the worse it is. So a tick of minus 34, we're going to probably see mortgage rates jump to about 6.25 today, the high end of my range. I've been expecting mortgage rates for this quarter to range from 6.25 to 5.875. We've been dropping down there. We were at 5.9 the other day. We had about 170 people trigger on our rate watch. I'll get to that in a second. But so now what's going to happen? So let's get over to it, and I can explain to you guys what most likely is going to happen to rates, the stock market, and the whys behind it. So the first thing we want to look at is, let's get over to here. We know there's conflict in the Middle East, and that's what's creating all these headaches. But I want to show you the fundamentals behind the scenes so we can look at that and then take some direction from there and then add the Middle East conflict with this, and then I'll give you my direction on where I think that the markets are going to go from here. So here's what we got yesterday, and this kind of snuck under the radar. The first thing we got on was a whole bunch of manufacturing numbers yesterday. We got manufacturing PMI that was at 51, stayed at 51. We got the employment numbers at 48, stayed at 48. But you go down through here, this is manufacturing prices. I've been saying we're going to have a January effect, meaning inflation in the first quarter this year is going to go up. And there's for a lot of things. But this is a bigger number than I thought. So this is telling us manufacturing prices, it went from 59. It was supposed to uptick to about 60. It went to 70. That's what freaked out the markets yesterday initially, when the markets just plummeted out of the gate. Then it got some good news throughout the day, well, whatever good news there was, and that kind of skewed the markets, and they ended up some in the green, some in the red. But this is with a big number that we missed yesterday, and this is inflation numbers telling us inflation, it's coming up, and it's coming up pretty high.